ICIC TV18, celebrating 15 years of leadership.
Hello and welcome to Markets Today. I'm Lata Venkatesh, and with me in the Delhi studio is Surabhi Upadhyay. What a day of trading it was. Absolutely out of the blue came a rate cut, the first in 20 months from the Reserve Bank, just half hour before the market started trading. And the markets started on a high and just went on getting higher. It was a rah-rah day, irrespective of which market you looked at, rupee, bonds and stocks. Hi, Surabhi.
Hi, Lata. What a pongal surprise coming in from the Reserve Bank of India. Let's run through the top headlines. The RBI sparks a bull charge, cuts the repo rate by 25 basis points ahead of the Fed policy and indicates there's more to come. The Sensex and Nifty surge over 2.5%. The Bank Nifty walls 3.4%. Other rate-sensitive stocks from realty and auto sectors also gained.
Bond prices as well surged to cheer Rajan's surprise cut. The benchmark yield traded below 7.70 intraday, ended at 7.69. The rupee rallied to two-month highs but ended lower after the Swiss Central Bank ended its two-year cap of 1.20 versus the euro.
And in big earnings, Bajaj Auto in top gear as revenues and margins come in ahead of estimates. Meanwhile, no fireworks from TCS in the third quarter. Dollar revenues remain muted. However, margins and profits come in line with estimates.
Those are the headlines, and here are the experts that we have lined up on the show for you tonight. First up, we will have the Minister of State for Finance, Jayant Sinha himself, and Dr. Arvind Subramanian, the Chief Economic Advisor to the Finance Ministry, talking about the Reserve Bank's rate cut. And from the market space, we will have Rakesh Arora of Macquarie Securities to speak about where he sees Indian shares headed.
All right, so lots of opinion coming your way, but first up, the action itself. The RBI move to cut rates got the bulls turbocharged in trade today. The Sensex gave a 700-point salute after marking its biggest rally since May 2009, and the Nifty rallied over 200 points as it flirted with the 8,500 mark. It finally closed just shy of that level. Anuj Singhal is here with the day's trading action. Anuj, the bulls were in complete control today. Bears completely kept at bay, wasn't it?
Well, what a spectacular day for the market because of the pre-market rate cut from Governor Rajan. Now, there was an expectation that the rate cut would come tomorrow, but it came today, and really the surprise element caught everyone off guard. Bears were completely caught off guard, and you saw quite a bit of short covering in the first half and a lot of delivery-based buying in the second half, and Nifty effortlessly went past the 8,400 to 8,450 resistance zone and finally, went within whiskers of 8,500. In fact, it went above 8,500 also intraday. Let's talk about some stocks. Financials led the way today. HDFC, IDFC, ICICI Bank, State Bank of India, Punjab National Bank, Axis Bank, all of them were there in terms of making big gains for the Nifty. Apart from that, High Beta had a field day today. So DLF was up quite a bit, up about 10%. Ultratech was up, and L&T also was higher in trade. Some other prominent Nifty winners included Reliance, Mahindra & Mahindra, and Maruti. In the mid-cap space, it was a high beta day. The mid-cap advance decline ratio would not look too strong, but the top traded stocks were in the green. So stocks like HDIL, India Bulls Real Estate, GVK Power were all higher. India Cement, Take Solutions, Lanco Infra, across the board buying is what we saw. So it looks like unless there's some major disappointment globally, this market is now headed back towards its previous highs of 86.20 and looks like stepping stones towards pre-budget rally may have been laid today.
Well, that's right, Anuj. It was a big day. Let's get you some market perspective. Rakesh Arora, the head of research at Macquarie Securities, expects lower returns in 2015 vis-a-vis returns in 2014, but he still maintains a target of 9,940 for the Nifty in 2015.
The Nifty target is 9,940, and compared to last year, it is a little bit of a modest, increase that we are projecting. But remember that last year was a turnaround year for Indian economy. We had a stable government after 20 years, and that really led to the re-rating. So out of 35% odd returns which market gave last year, 15% was re-rating, the PE re-rating that we saw in expectation of better growth. So you can't expect re-rating to happen every year. It's already happened. And now it will be back to earnings growth. So, 19% return is consistent with around 19% earnings growth that we are forecasting for the market for next year. We are pretty optimistic about liquidity picking up globally. And that should really, stabilize the FI inflows that should happen in 2015. meaning 2014 was a little bit tepid compared to what happened in 2012 and 2013. I see no reason why 2015 would be, any worse. We should get at least $18 to $20 billion of inflows from FIs this year.
Okay, fantastic day for the markets. Now let's get you all the action from the futures and options space. Let's go across to Nigel D'Souza. Nigel.
Well, we had a splendid trading session, though the Nifty came off the top. Now, importantly, the base for the Nifty has moved higher. Take a look at the 8,400 put as well as the 8,300 put. Traders were riding those particular strikes and trying to lift the base from the Nifty. So, for example, the 8,400 put, the premium fell from around 150 bucks to less than 70 rupees, while the 8,500 put as well, the premium fell from around 220 rupees all the way to around 102 bucks. So what's that telling you is that in the near term, the traders are counting on around that 8,300 level to hold out. Remember, the base has been moving higher from around 8,000. Then traders are saying maybe that 8,200 level will get protected. And now, in fact, they made a case when the 8,300 level should get protected. Take a look at what happened on the call side. The 8,300 call as well as the 8,200 call, both of them saw shedding. What's that telling you is that call buyers, they were unwinding their position, while call writers, they got stopped out in today's session. The call buyers, though, they unwound their position. They went ahead and took a bit of a punt, bought the 8,600 call as well as the 8,700 call, and take a look at the money they made, particularly the 8,700 call. If you had bought that particular strike yesterday, you would have bought it for only 6 rupees. You would have gone home with close to around 18 rupees. Individual stocks that were in focus. Definitely it was a day for short covering, because take a look at SBI. That one saw a big short covering bounce in trade today. Andhra Bank as well as Yes Bank from the banking space, both of them saw the shorts getting squeezed out of the system. But the reason that the Nifty went higher as well as the Bank Nifty went higher was the biggest weight from the banking space was in fact ICICI Bank. That one saw a big short covering bounce in today's session itself. From the F&O stocks that are part of the Nifty, IDFC was a big stock over there. Big buying was seen on that counter, while HDRL, surprise, surprise, that stock as well did see big buying, maybe with the rate cut coming about. Traders are going ahead and positioning themselves and buying the HDIL stock as well. So interesting day of trade. In the near term, though, we should see that 8,300 level act as some kind of support for the Nifty.
All right, Nigel, thanks so much for that. So plenty of action in the futures and options space as well. But Lata, let me come to you and get your sense. I mean, you've been speaking to a lot of bankers, lots of reactions pouring in. Big surprise given that this cut came before, out of turn or before the Feb policy. And what's the expectation from here on?
You got it bang on. The biggest part of the surprise was not the cut itself. It was always expected after the, below expectation CPI and WPI numbers. But it wasn't expected just 2 weeks before the policy. That action gives the sense that the Reserve Bank will not hesitate to be dovish. At least that's how the market's reading it. The reasons that the Reserve Bank has spoken of are serial fall in vegetable prices, which have always been the volatile element in the CPI basket, as well as, of course, global commodity prices falling, and Indian demand itself not picking up because of very poor growth. As well, the behavior of the fisc has impressed the central bank. Going forward, the Reserve Bank is indicating that this cut definitely indicates a change in stance, but the future cuts will be data dependent as also dependent on the quality of the fiscal deficit. So it was a little austere and reserved note, but that's not how the market read it. The market read it quite clearly as a change in stance, which will be followed up by at least 3 or 4 rate cuts in the year, which means we could see the repo at 7% before the year is out. That at least is the market's expectation.
All right, well, that's perhaps not just the reading on Dalal Street, but even within the corridors of power in New Delhi, the Finance Ministry has been prodding and nudging the RBI to cut rates, and they've finally gotten their wish coming through. Now, Finance Minister Arun Jaitley believes that the move will put more money in the hands of the consumer and will help kickstart the investment cycle.
The reduction in the rates is a positive development. It will lead to more money in the hands of the consumer, greater spending. It's positive for the Indian economy, and it will certainly help in reviving the investment cycle.
Just because it's a sustained campaign of North Block to get a rate cut. Shailen, I think it's all about the power of leadership. And in fact, as you know, we have been sent here to do the people's business. And the people's business is to get the economy moving, to transform the economy, and to give a better life for all of our people. And we've been leading in that regard.
It's not just a rate cut, but it also signals a shift in the direction and stance of monetary policy going forward, as the statement itself has noted. I think this has not come a moment too soon for the economy. This will be very positive for the economy in a number of ways. You know, both spending by firms and by consumers will increase, and therefore this is. It will also act in directly and indirectly. Directly because, you know, it'll be easier for the credit system to flow. There'll be more demand for credit. Banks' position will be better. And also indirectly because the balance sheet of the private sector and the banks will also improve.
Well, now that the RBI has done its bit, will banks follow suit? Sources in the finance ministry say banks are likely to cut interest rates by as much as 50 basis points. However, SBI says that a lending rate cut, while it is on the cards, there isn't too much of agreement from the bankers that there will be huge rate cuts on their part.
You cannot be too far ahead of the pack. And therefore, you know, that is a call that I need to take after seeing how others are reacting.
Okay.
So we'll see how it works out.
Okay.
And of course, it will depend upon what are the margins that we wish to retain. As you know, the deposit rate, even when you bring it down, it takes a little while to play in. Whereas on the side of the base rates, the fall in income will kick in from day one.
All these moves, including the movement in deposit rates, brings down the cost of funds for the banks. So I'm sure banks will gradually make the rate cuts, benefits go to the consumers as well. It's a matter of everybody's alcos moving, everybody watching their own cost of funds. But clearly the movement is in the direction of reduction in it. Right.
This was as good a time as any because we had inflation numbers that came in yesterday. Inflation continues to remain extremely low. I personally don't see the likelihood of significant increase in inflation in the course of the year, irrespective of what assumption you make. So given all of that, RBI has taken this move to cut rates by 25 basis points, and I think it's a great move. We have a board meeting coming up later this month. We will review lending rates over the course of the next 1 or 2 weeks, and then whenever we find that there's sufficient reduction in rates, we will definitely cut rates.
Well, moving on to the other big story of the day, SpiceJet's former promoter Ajay Singh is all set to pilot the crisis-hit airline. Yet again, the company has informed the BSE that its current promoters, Kalanidhi Maran and KAL Airways, will transfer their ownership, management and control of the company to Ajay Singh, subject of course to approvals. Sonia Shanoy is here with all the details of this deal, but not much of the details were anyway revealed.
Well, thanks for that. Yes, finally, SpiceJet has a new promoter. Kalanidhi Maran, who is the erstwhile promoter of SpiceJet, has transferred his entire 53% stake to Ajay Singh, who is the co-founder of the company. Now, we don't have any financial details of what the fund infusion is, whether they will be exempt from the open offer or not. But all we know is that the scheme has been submitted to the Aviation Ministry for a nod. The nod will come in the next couple of days from now. There will be some corporate restructuring as well. Some job layoffs are inevitable, and in fact the SL Narayan, who is the group CFO of the Sun Group, said that they will continue to be minority stakeholders post the ownership transfer. They will only lose their promoter status. Back to you.
Moving on to earnings now, IT bellwether TCS announced its third quarter numbers today, delivering a mixed bag. Rima Tendulkar is here with her analysis. Rima, what do you make of the numbers?
Thanks so much for that. TCS has missed the slightly muted expectations on the dollar revenue. The company has reported a flat dollar revenue growth in Q3, lower than street expectations of 0.5%. Margins have come in at about 27%, in line with street expectation, and profits too have risen by 3% quarter-on-quarter basis, again in line with street expectations. What's disappointing is that the constant currency growth has come in at 2.5% this quarter, which is lower than what Infosys had delivered of 2.6% 6%, and this has probably happened after many, many quarters. Also, the volume growth at only 0.4% of 40 bips seems low even for a seasonally weak quarter, because if you remember, in Q3 of FY14, the company had delivered a volume growth of close to about 1.8%. But other than that, about the internals, the rupee revenue growth of nearly about 3% is largely driven by a higher realization of about 2.3%, and margins have got the benefit of currency as well as on the back of improvement in gross margins, partly taken away on the back of an increase in SG&A. Utilization for the company sits at a lifetime high, so excluding trainees, it's inched up to 86.7%, 7 new deals won, and attrition has gone up a bit on a quarter-on-quarter basis. Talking about geographies, North America is down well. Latin America has bounced back for them this quarter, and UK is under pressure, but that was on expected lines on the back of Diligenta. Vertical-wise, you've got BFSI, which has reported a muted performance this time. Retail has been weak, again in line with street expectations, and in terms of service lines, it's ADM, which is down close to about 2.5%. But overall, it's an okay quarter. It's an okay performance from TCS this quarter. Seems a bit lackluster compared to what Infosys had delivered. Back to you.
And on that note, let's take a break. But coming up, Sudarshan Sukhani will join in for a technical chat and also give you some trading ideas.
CNBC TV 18, celebrating 15 years of leadership.